Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with the market recap for today, January 6th. Non-farm payrolls came lower than the previous one, 223 instead of 256, but we got a little bit short than the consensus of 200,000, but still we are going lower. Unemployment came a little bit lower than expected, and the previous one, this is mixed sentiment. This caused a little bit of sell-off initially, but the hourly earnings month over month came lower than expected. Earnings year over year lower than expected, and average weekly hours a little bit lower than expected. Non-farm payrolls private a little bit higher, but government payrolls and manufacturing payrolls came super low. ISM non-farm manufacturing came super lower, 56. The previous one we were expecting 55, we came 49, and this was a very nice push because Feds are waiting until see facts and data that shows that manufacturing and the economy is cooling down, and this is one of the big ones today. Apart from the non-farm payrolls decreasing and unemployment rate, this was a little bit of a debate if this is bearish or bullish, but still non-manufacturing came a little bit good for us and for the Feds. So this changed the sentiment, and as you can see, stocks rally after hopes of easing inflation grow. So stock rallied today because the non-farm payroll showed that economy added only 223 instead of the expected 200,000, but still the non-manufacturing PMA showed that the services industry contracted in December, a sign that the Fed's rate hikes may be working to slow the economy. So this is the kind of things that we are waiting for the Feds to switch and to start seeing, okay, we are seeing data that shows us that economy is cooling and inflation may be going down. So these were good news initially. Remember, I was talking about unemployment rate. So we initially sold a little bit. We push after that, and until 10, at 10, we got the ISM non-manufacturing, and we started rallying. And right now, I mean, look at this. We are 2.65% in the green on the Nasdaq, 2.21 on the S&Ps. Very big volume today. Apple 3.47. Look at this. This is a big rally. If we check the daily, we were holding, look at this, in the S&Ps, we were trading in this range. We are still in the range, but we are pushing higher. If we check on very decent volume, let's see how we finish today, Friday, but we are in this range. And on the Nasdaq, we are seeing this kind of move up, that maybe some hopes that we can break the range and start going higher and to this 11,600 that we got previously as support. So economic data came good today. We push, and we are actually seeing a lot of sector funds in the green. XLY versus XLP is the only ratio that I'm finding not a little bit bullish, but still 0.63 for staples instead of consumer discretionary. Consumer discretionary right now, XLY 2.14, XLP 2.679. So that's the only thing concerning. Energy 1.78. Look at this false breakout of this pivot. We will see how it ends. Crude oil is in the green a little bit, but I think the good one is that apart from the Nasdaq and all the tech stocks, look at this, Nvidia 4.30%. Look at these beautiful wicks of this daily level. And as I was saying, apart from the Nasdaq and the tech stocks, look at VIX. VIX is pulling down a lot. And look at the yields. Look at this. This is certainly something to watch, something to follow up, because the 2-year, this is the US 2-year yield, 4.39 in the red. This is a big pullback. The 10-year 4.19. Look at this. This is noticeable. You have to watch this and to follow that, because this is not something that happens quite a lot. So we have to watch and follow up these two yields, and also expectations. April Look at this, 4.84. So, and September minus 2%. Both yields, expectations, interest rates, terminal rates are April and September 4.85 more or less. And in December, we are seeing a cut. So still markets are pricing in 4.80 something, not the 5% that the Feds are watching, but due to the economic data, markets are adjusting that, and maybe we are going to see less interest rate hike the next in February. So let's take a look at that, how that changed and how we are factoring in today's economic data. So we check the FOMC Fed Watch tool, 75. Yesterday it was 60, now 76%. They are expecting that's 25 basis points right now, 425, and we're expecting 450. So that's the kind of things that you want to see, because markets are adjusting expectations based on today's economic data. So quite good to see this. Quite good to see this. And you have to be happy, because this is a very nice move. Everything is green, tech is green, yields are going lower, and this is the kind of things that ending on a Friday gives you hopes about the near future and economy getting better and inflation going down, and we can start to be a little bit more positive. So happy, congratulations, bulls, happy longs, but be careful, because we are still in this kind of range in which anything can happen. If we check the 30-minute chart, we can see that this level, 11,100, we got this CPI. No, it was the CPI. No, it was the one of the economic data last week. We hold this 10,700. This was, I was mentioning this. If we hold this, we might see a move up. This is good news on good economic data for right now. And we are hoping to see continuation for 11,200 and 11,300 to reach. Let's take the 2 hour, we can see it better, to reach this kind of resistance at 11,100 and then the next one. If we check the daily, we can see better that we were holding all these levels beautifully, and we can, if we break this pivot, this last week high, 11,183, if we break this pivot, we can start seeing higher highs, and maybe we can start some kind of bullish run. Be careful, we are not out of the hole yet. We need to see continuing good economic data, but at least this is something to be happy about our economy. So that's good. Congratulations and happy weekend. We can end the week on a high note, and hopefully next week we can see some continuation. So what are we expecting for next week? Let's check the economic data for next week, because next week we have CPI on Thursday. This is going to be super important, critical, key for the markets. CPI, we are at 7.1% year over year. We are expecting a huge drop. Be careful with the expectations. And also the core from 6 to 5.7. If we see this, we can see a beautiful continuation to the upside. So that's going to be on Thursday. Before that, I think there's nothing important. And on Friday, consumer sentiment and some Fed stocking. But for sure, remember, Thursday, 1 hour before market open, CPI data on Thursday, January 12th. So I think that's all. Thank you for your time. If you found this video useful, please remember to click the like button and subscribe. Remember that I upload new videos every single day for market forecasts, market updates, and market recaps. I appreciate your time. I hope you had an amazing trading day. Congratulations, bulls. This was your day. This was what you were expecting. So congratulations. Enjoy your weekend. And remember, discipline and risk management are key for success. Stay safe, everyone, and see you on Monday.